touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Thanks for tuning in to this very special interaction. We have arguably one of the slowest telecom networks in the world. Data speeds are, well, an excuse, so to say. Our networks are choked, if experts are to be believed. Neighboring Pakistan has probably better speed than India does. So some investments which needed to happen yesterday have still not happened. The question is, can they happen in the near future, and who will benefit out of it? Well, let's speak to one potential company which benefits out of this and talk about their business as it stands right now and how it stands to grow over the course of the next decade. Mr. D.S. Rawat of Bharti Infratel joins us right now in this discussion. Mr. Rawat, good having you. Thanks so much for joining in. The sense that we get, Mr. Rawat, from almost all experts that we speak to who track this space is that operators needed to invest in infrastructure and needed to invest in infrastructure yesterday. They haven't done that. Do you foresee that investments from telecom operators will start off very, very soon, and that those investments could happen not necessarily in the optic fiber network, but in the mobile broadband network?
So I wouldn't agree on the fact that investments have not happened. I'm seeing an acceleration of investments that typically would have happened in a market like India over a long period of time. And let me put that in a perspective. 2G India was, behind the rest of the world by about good 15 to 20 years. 3G we did about 10 years behind the rest of the world. 4G we were just about around the same time that the rest of the world was adopting, and now already people have started talking about 5G. And given those kind of investments and the huge amount of money that operators have put in on spectrum, there is anywhere between 60 to 70 billion that's committed to the spectrum, and large part of that went in on renewal of the licenses for 2G, but much bigger chunk towards 3G and 4G networks that were to be built. In all of the markets, there was a fair amount of gap between 3G, 4G. India, we've seen a huge amount of acceleration of that, and the growths that have come in because of the poor wireline connectivity that the country had. Wireless was the only means by which a lot of people experienced their first internet in the country. And given the huge amount of data consumption that's coming up with good speeds that operators were able to get on 4G network, today India is probably among the fastest growing data network in the world. We've got now users consuming close to about 10 GB on a 4G network per month. This number about 5 quarters back was just about less than a GB per customer per month. That gives you the scale at which this data has grown, something this was not, I don't think, was easy to preempt or predict at that time. And this also happened due to the huge aggressive pricing that this market has. India has by far the lowest tariffs anywhere in the world now, and clearly that's caused huge amount of expansion, or explosion I should use the word, of data consumption in the country. And there is more to come. Are we behind in terms of network build out? Honestly speaking, the last about 5 quarters that we've seen, the highest amount of investments have gone in actually in deploying 4G base stations. But it's been on 2 different counts. Incumbents have been putting it on the existing sites. They already have large number of 2G, 3G sites on which they've been deploying 4G depending on the spectrum availability. And new operator in the shape of Jio clearly going aggressive to build 4G only network across the country and trying to give the incumbents run for their money.
But which is the question, right, Mr. Rawat? Let's assume that some investments have happened, but we can't deny the fact that the speeds aren't the best, and consumption is rising, as you said, 10 gigs or 11 gigs as the case may be per consumer as well, which means that operators will now have to start an investment rollout very, very shortly. At least that's the belief that we have. Do you share that? And 2, if that were to happen, because of this very paucity of cash that you spoke about, a lot of cash has gone into spectrum auctioning and a few other areas, will telecom operators now invest in mobile broadband as opposed to optic fiber?
Again, I would first answer the second question first. I don't think the question is of either or. whether you want to invest on mobile broadband or you want to invest on fiber. If you're referring to investment on fiber as fiber to home, yeah, that could be something that would be in discussion. But today, carrying fiber data on fiber is the only means in which you can carry this huge amount of data that is produced in these cell sites, where they're using mobile broadband frequencies to connect with their end customers. So my sense is operators will need to invest on both fiber, at least to the building, to the curb, or to the cell sites that they are connected into, from where they can carry this data. That's what will give the end user experience that you're talking of. You're referring to the end user experience that's deteriorated for a few hours, particularly during the busy hours. And my sense is that with consolidation that we've seen in the operator domain now, there are going to be only 3 meaningful large operators along with BSNL, the fourth one, and all these operators will be going after the same market share. And this battle, from a pure coverage battle, will move into service differentiation. That means the operator who's got better services will garner the lion's share of incremental market share that's likely to come. And there is a huge growth that we are envisaging from this point on, both on the count of number of subscribers and also on the usage per subscriber. Unlike voice was limited by the population because you needed 2 people to talk to each other. Data, unlike voice, does not have limits. Firstly, the data on a per customer basis, unlike voice, which was limited to about 300-400 minutes of use, in the max going up to about 1,000 minutes of use per customer per month, data consumptions, we've already seen more than 10x growth in 5 quarters. And this can potentially go up depending on the applications. The second domain on which the number of subscriber comes in, the product of the two tells you what capacities are needed. That again is infinite in the sense that with devices getting connected, people are using increasingly more and more communication with devices going forward, and with richer content, the number of devices with IoT taking off meaningfully, the subscriber limit is pretty much limitless. You could, depending on the use cases, applications, and as you move on to applications like 5G, which are real-time, driverless cars, you would probably need infinite number of subscribers multiplied by each subscriber using data which is going up depending on the applications that are there. Now the operator challenge is clearly to dimension the network for some of these things, and that's where we come in. 2 aspects where they have to dimension for. One clearly is to create more cell sites, depending on where and when you're facing congestions. The first aspect is typically a coverage aspect, which is where you cover a certain geography with the spectrum that you have, thereby enabling subscribers to have 4G. And typically in the CBD areas, you start to see congestion. As you create the coverage network, you start to see congestions, and typically it starts with a couple of hours in a day. The busy hour, as it's called, those are the times when you start feeling congestions in certain area. Data networks, again, are very noise sensitive. If you have more subscribers, these networks tend to shrink in terms of both coverage and capacity that they can provide, and hence operators have to constantly monitor that and create more cell sites to offload and create more capacity in the vicinity. The second step, after you start doing that and you have the requirement across the entire geography, you could go back and acquire more spectrum and thereby create decongestions in the network. And this is a fairly iterative process. And as you mentioned rightly, this calls for a huge amount of capex to be put in on an ongoing basis. And you pretty much put probes on the network and continue to expand the network to create capacities and free up, particularly during the busy hour. You might still have free capacities during the off-busy hours or off-peak hours, but the busy hour is what really creates the differentiation that I was talking of in terms of services that are being rendered by various operators. And my sense is, given India being a very sensitive market, both to price and to quality, churn will start to play an important role after a certain time, where people will choose networks purely on the kind of services that people are able to offer. And we think there's a fair amount of investments to come. This will come in not only on the traditional macro sites, as they're called, which are the traditional base stations that we've been building. We foresee that going forward, small cells will also be one of those ways to provide better in-building coverage or better point coverage in certain areas where we're seeing congestion on certain points of the day. Areas like stadiums, footfalls, airports, these are clear cases where one could deploy small cells. From an operator perspective, to defend them, my sense is, as I said, they're moving to high 70-80% of sites where 4G is already enabled. This number will probably go to high 90s before you will start to create offloading sites or cell splitting or creating more cell sites in the vicinity to cater for the coverage and capacity requirements inside the building, or creating capacity requirements in areas which are causing congestion for a certain hour of the day. And that differentiation, we're already seeing a few sites being built by operators. My sense that will start to go up depending on how traffic analysis is being done and how proactively sites are being built by operators. But all this will also need fiber, to the point that I was saying earlier, to backhaul this, because user experience is a function of the entire chain having adequate capacity. Because you get whatever the weakest link is what creates the user experience for a person. And it could be to do with the application that you're using, it could be with the gateway through which you're taking your traffic, it could be the fiber, and in the case which is more relevant with us is the last mile, where you're creating a radio interface and connecting a group of subscribers through a radio base station. That's where we come in, and we're geared up to cater for whatever demands that operators have. As I said, the last 5 quarters have been far more busy doing expansions on the existing sites to the extent of enabling 4G in the hinterlands of the country.
So as you just mentioned that the telecom companies are now busy upgrading their current sites to 4G. So because of which we have also seen a slowdown in the tenancy addition for the tower companies. So when are you expecting this to change? When are you expecting a pickup in the tenancy additions?
Yes, to answer your question, and that's what I was trying to refer to earlier, that for the incumbents there's been huge amount of focus in terms of first creating the coverage layer and being present in all the geographies. Incumbents were having subscribers on 2G and 3G. They are now gradually trying to create the 4G network across their leadership circles, and that's reaching kind of 70–80% in terms of areas that they've already enabled 4G. Once that is done to 100%, the only expansion that's likely to come in is in terms of either building new sites or going in as a full-blown co-location to an existing site if there is one that exists, and we expect that to have an uptick. The second reason why we've seen a little bit of slowdown was also with the consolidation that's playing out in the market in a huge way, and there we've seen the larger operators were the operators who have acquired some of these companies, and we're going through the integration process to say that they create spare capacities to take on whatever subscribers that they've acquired from these networks. Vodafone Idea merger is another thing that is round the corner, and there too a huge amount of integration effort is going to start very soon, and that's also going to cause certain amount of energies to be focused on creating those capacities to combine and merge the two networks. We haven't seen so much of expansions on new sites or new build-outs purely because operators were trying to optimize the spectrum that they've acquired as part of these acquisitions or mergers, and also use that effectively in an expansion scenario to create additional capacities across the network.
So when, in your sense, you're expecting this tenancy addition to grow for the company and for the tower industry?
Definitely. In the long run, we are far more bullish, and for the reasons that I said at the very beginning, that the typical requirement of capacity is a function of the number of users and the usage per customer. If you multiply that, that's where the capacity sits, and we see a huge potential for data to grow in this market, and the requirements of sites is going to go up as we move forward. The type of sites, however, might not be the same large macro sites that we built in the past. Some of these will also move towards what I was referring to earlier as small cells. These are point solutions to give coverage inside buildings or in areas of high footfall, which helps create huge amount of capacity in the area that these are deployed. Two limiting factors for that in the past was availability of good power and availability of fiber. We think now with fiber proliferation in the cities, small cell solutions will be the way to offload some of this traffic from the large macro sites. And these have a potential to grow in huge numbers as we move forward in 4G itself. And with 5G, that will be a definite reality. With 5G, we think these numbers could run into millions of sites if 5G was to happen the way it's being envisaged on a seamless manner across the country.
So obviously with 5G coming in, and because of the small sites, the operators will be more focusing on densification of the network, as you just said. So, but currently if you see, operators are using their own capex, they are doing their own capex for the small sites. So how does Bharti Infratel as a company plan to grow, keeping this in context?
Given the price sensitivity of the market and given the lowest tariffs in the world, we believe sharing is a very logical way of trying to keep this competitive in terms of being profitable to create small cell sites and handle and give good user experience to people. To give you a simple analogy, a small cell site would definitely need fiber on that location, and in some cases you will be paying a certain amount of rental for the location where you've deployed a small cell site. And that could be a building, a society, or a high footfall place, even an airport for that matter. You pay rentals for these locations. If two operators were to share the same infrastructure, and that's the play where we come in by putting in our capex. If you're able to create a shared infrastructure of fiber and of the real estate and also of the energy connection that is there, not only does that make it look aesthetically much better for that infrastructure, but also creates a huge opportunity to reduce costs by sharing the rentals between more than one operator and also sharing the fiber network between more than one operator. Clearly, this is a duplicate infrastructure, and that is where we step in to create value for everybody by creating substantial reduction on their operator cost, both in terms of capex and also in terms of opex. So we think there is a play in India, unlike what we've seen in some of the developed markets where there was a huge amount of fiber proliferation in the cities. Operators were making huge amount of ARPUs, $50 and north of that. Their operators do tend to build their own small cells as a huge differentiator for service between operator 1 to operator 2. But in India, we think given both the things are happening simultaneously, three strong operator domain getting built up, all of them wanting to compete on service differentiation, we believe there's a huge opportunity for sharing small cells, particularly if you're bundling that with fiber together. And as a use case for this, we've leveraged Smart City as a great solution to showcase some of these solutions to our customer. Bhopal Smart City is a case in point where we are building the first ICT layer of the Smart City in Bhopal, where we've done nearly about 150 smart poles which can house electronic equipment in them. These are all interconnected with fiber. These have surveillance cameras. They can monitor the environment. So it is a unique case where we are trying to showcase an opportunity where the government utilities can share that infrastructure, particularly the ICT layer, along with telecom operators and create a robust telecom network which is shared, and respective parties are able to use this for their own growth benefit of giving a better user experience to the end customers. So we think this use case will go a long way and expand to other smart cities too. NDMC recently, in fact yesterday, Indus has actually announced that partnership with the NDMC, and there was a launch function where they deployed the smart pole solution in some of these locations. These definitely have an opportunity to expand where we leverage the existing infrastructure of the government in some of these locations and use that to share with all the operators on a non-discriminatory manner.
Just one quick question on rates as well. I know you don't want to dwell too much on the short term, neither do we, but just wondering, what are the rates at which the new tenants would be coming in? Jio and the others, have the rates dipped? Even if you can't give me an exact number, what's the trend been like and what do you expect that to be going ahead?
So we've as a company offered non-discriminatory services and non-discriminatory offering on commercials to all customers. So today our tariffs are exactly the same pretty much to all the operators that we are doing business on. Tower capacities are not fungible capacities. These are not, secondly, tower business is also not an elastic business like you see an operator business to a certain extent. It's not that the change in tariffs or change in rates helps too much in terms of expanding the demand to a great extent. So we've not seen a significant shift on any of the tariffs. In fact, there was a correction in the base rates that we started to do as of 2016. We continue on that journey where our base rates go up every year by 2.5%. You have to appreciate that market like India, there is fair amount of inflation. The cost of raw material keeps moving up steadily. Some part of that is compensated by technology. Some part of that is also compensated by operational excellence. But there are inflationary tariff increases that happen across for most of the commodities that we are involved into. And those are the things that we try and work at all times to see that our tariffs are so positioned that it's always cheaper for an operator to use tower companies' tower rather than building that on their own. Plus there are additional benefits as and when there is sharing, we pass on additional benefits, and this is the uniqueness of the Indian model over some of the other countries where as and when we get a second customer on an existing tower, firstly, even on one tenant, our tariffs are lower than what it costs the operator to build and manage that tower on his own. on two tenants, we pass on further discounts to the incumbents and to the new tenant, whereby they're attracted to use those towers, and they share rental beyond a certain threshold and also the energy cost, thereby reducing their total cost to a great extent. So the model is such that as we get higher on tenancy ratios, we start to become more and more attractive for the operator. This dissuades tower companies for building towers next to each other and create an infrastructure which is duplicated, and where both operators are more likely to sit with a single tenant for a long time. Given that this market is now consolidating, the opportunity is to go up to about 3 tenants, and if you've lost that or created a tower adjacent to another tower, you're more likely to stay as a single tenant, and that's what operators are able to see a value to. You draw a net present value of staying single tenant for a long time on somebody's tower, you pay significantly higher cost both on rent and energy over the entire life of that contract. So we've seen tariffs to be pretty much stable at the levels that they are. A little bit of technology help. As I said, we're moving now. Earlier we used to build towers which were 50, 60 meters in height. Now the average height of towers is more closer to 35 meters. And that's in a way helped to keep those tariff levels at the same level that we've had.
So now in the tower industry, there are two major players, that is Infratel Indus and American Tower Company. So is there any kind of competitive intensity that you're seeing from American Tower Company that you've seen in the last few quarters, or has anything changed on the grounds given the fact that there are now limited number of telecom operators?
Again, I mentioned earlier that tower capacity is not fungible capacity. If you have a tower in a particular location, it's best for a new operator or anyone who's looking for growth in that area to use that existing tower. With ATC's current acquisitions, they've got now to a fairly decent scale, and they have an equal opportunity in the market to grab tenancies that are coming in. Whether that competitive intensity has impacted anything on pricing, I also mentioned earlier that these are not fungible capacities, nor is there elasticity, and hence we haven't seen any shift on tariffs. Aggressive, yes, we continue to work with our customers to see we get lion's share of their business, and it's also a function of relationship and what we are able to deliver as services to our customers on an ongoing basis. Customers make significantly higher revenues on the towers than we do, and that is where their dependence on the service levels is even higher in a lot of these cases. Number two, I think some of the acquisitions that some of our competitors have done are at a premium to the book value. Any discounts that they do from the current tariff levels, which, as I said, at one tenant you pretty much do not make any returns on the investments that you have, they will go further deeper into red by giving any discounts beyond that point too. So we think it's a self-correcting model where, depending on what price you build the tower, your return ratios on return on capital, because this is a fairly capital intensive business, your return on capital determine what kind of discounts you could offer. Again, the bargaining power of the operators is also significantly strong. Any discounts that you pass on a certain location, clearly there is a propensity to extend that to the entire base of the network. And as you know, tower companies are growing co-locations anywhere between 6 to 7% a year. For that 6-7% incremental business, a small discount here and there would not make any meaningful shift on the demand or on the growth that an individual company is having. So we don't see significant pressures there. Yes, there has been higher impact of operator consolidation on different tower companies. There again, our strategy of building towers pretty much for the leading operators has helped. So our exposure was significantly lower to the operators that have got acquired, or some of them who had to shut down their operations. And that's why we believe we've gained market share even in this consolidation, purely because some of our competitors have lost significantly higher amount of co-locations in this consolidation game.
Now there are only 3 major telecom operators, private telecom operators, of which Jio has indicated that their preference remains in building their own towers. So has there been a slowdown in tower addition from Jio's side? And if Jio continues to build their own towers, could that put pressure on the tower rentals going forward?
Again, I don't want to make operator-specific comments here. These are large customers of ours. We value them as customers. Their decision to build or buy, as we call them, or to lease is purely their decision. I told you earlier, tower, the technology is known to everybody. We don't keep IPRs. We are happier if everyone builds the same kind of tower and uses the same kind of electrical equipment on the site. So the costs are known. The cost benefits of sharing, I already talked of earlier, are also known to everybody. If for some strategic reason certain operators want to build towers on their own, that's purely their choice. Does that give significant advantage to other players who are going to use the shared tower over that? That's again a call that they need to take on. For us, as I said, Jio remains a valuable customer to us. We continue to work with them and grow wherever there is requirement from Jio for us to either build towers or to come in as co-location. So we continue to grow business with all our customers, and we value them. As we said, we offer a non-discriminatory service to anybody. Any operator who wants us now, because these are all strong, formidable operators, wants us to roll out towers in any of the geography, we are more than happy to build towers for them. And we believe with this service differentiation battle that's likely to start, it's only a matter of time. The difference between the number one and number two operator, both in terms of coverage and capacity, will not be significantly high. Earlier, there were times when there was the number one to a number three or a four operator had nearly half the number of sites in a given geography. Today, that will start to come down very rapidly, and we think if you build a tower, your probability of getting a second tenant on that very quickly, or the time between the second tenant will significantly come down as we move forward.
Now, as the Vodafone Idea merger is expected to complete in the second half of August, have you had any discussions with them regarding the number of exits or any discussion regarding the exit penalties? Is there a way that can be waived off or lowered for Vodafone and Idea?
So far, we've had no discussions on exit penalty because that event has not happened yet. Vodafone Idea, they have also not come back with their exact plans of integration yet. We believe they're waiting for the final approval, and post that we'll be happy to work with them too. We've stated this to our investors earlier, that if there is an offer from our customers, as per the contract, there is an exit penalty which is applicable. Again, no disputes on that in terms of applicability of that. But if there is an offer from any of our customers to see that that exit penalty is fairly compensated for, we are okay to look at those options too. As of now, we're not in discussions with anyone on any of these exit penalties as of yet. You will understand that our business is a business where we put in significant amount of capex and monetize that over a longer period of time. So we like the fact that revenues are more straight lined over a longer period of time rather than having one-offs that come in as exit penalty. And because these are large operators, we've shown our willingness to look at options which fairly compensate for the exit penalty that was applicable and creates a win-win proposition for the operator and us.
Along with the smart city projects that we are seeing, now the telecom policy also focuses on fiberization of towers. So do you think fiberization of towers could be the new business venture for Bharti Infratel going forward?
Yes, and that is one of the ways we thought we will showcase in smart city solutions like we've done in Bhopal. We've laid fiber. We are trying to interconnect as many tower sites as we can. All these new sites that we build there in street furniture and so on and so forth are fiberized from day one. This is an offering that we are taking to the customer and saying fiber within the city integrated along with the cell sites will be a great solution for 4G, and definitely will be a mandatory requirement for 5G is our strong belief. And that is why we are taking that early steps to establish that. We have a company called SmartX as a subsidiary below Infratel, which has the necessary license to lay fiber, both lit and also to do Wi-Fi in some of these areas. So we are showcasing some of these solutions of small cell, fiber, integrated fiber solutions, shared opportunity on small cells, everything as a showcase. And as we launch, hopefully we'll have a larger coverage from everybody to showcase what we've created in the smart city of Bhopal in terms of not only improving the telecom network there, but also creating a shared network which is used both by the government and by the operators seamlessly, and creating huge opportunity for future IoT solutions and applications to mount on top of this underlying critical ICT infrastructure layer, which is very essential for any smartness to happen. Because you can only do that much data analytics once you have all this real-time data coming in, which you can put into good use case. So initial application demonstrations to the authorities, to the government authorities there, they've been really impressed with the results there, and they're very happy on the direction that they've chosen on Bhopal Smart City. We think operators will also like this and will use this opportunity to share both fiber and small cells together as a bundled offering in some of these areas.
Mr. Rawat, we'll leave it at that. Thank you so much for taking the time out and being with us today and giving us your thoughts. Really appreciate you explaining your company and your industry to us.
Thank you very much. A pleasure talking to you.